Oh, guys, good evening. It's Katavaz. How are you? Today's discussion was abrupt, so maybe the only one to help you, to help us share knowledge or agree on a few things. Then maybe the next time we shall have one, we shall be a little more organized and more facilitators. So the plan is that we shall be covering what they've covered so far in class, and we shall try to go in that order of class coverage. Okay, so we all know that we covered the first topic, conceptual framework, and IAS 16 later. So as I scroll through, if we come across any questions where we see IAS 16 or we see conceptual framework, we shall attempt those first. Then once we exhaust at least two numbers, in one for IAS 16 and one for conceptual framework, then you can go to the next standard, which is IAS 40. Okay, so my plea is that we respect each other once you join.
Oh, how am I going to write? So I write in darkness.
Okay, I was just saying, once you join, kindly mute so that we don't interrupt. Okay, so as you're aware, these Zoom links are a little time bound, especially when you don't subscribe. So I'll start straight away. So I've shared a question. Hopefully you can all see it. This is the paper we're doing. Okay, it is 2020, 2021. It is coursework, it's semester 1. So I'm going to be scrolling through, like I said. If we meet a standard that we want to cover now, which is conceptual framework and IAS 16, we can agree on it. I'll share my opinion first. Then if that makes sense, then you also share with me yours. Okay, so kindly be informed that I'm a student just like you. So basically, I'm not perfect. Okay, so I feel, what's this guy saying? I'm probably ready the other way around. Feel free to contribute. Okay, so this is IAS 23 borrowing course. We shall not go into that now. We are interested in, this is IAS 38, interested in conceptual framework and the PPE or IAS 16. So the first question we meet is question 3. It says that, I hope you can all see the question. If you're not seeing it, kindly confirm so that I can be able to reshare or help you out. So usually I tell people that always read the required bit. If the required bit makes sense, then you can read the entire text. So here they're saying, based on the information above, how much cash was paid to purchase new PPE during the year ended 31st July 2019? Okay, buying new PPE. I hope you're aware that under PPE, what you call the value of the PPE is the cost. Okay, at transaction stage, if you're trying to obtain control of an asset, we record that particular asset. As soon as you obtain the control at cost, okay, what we call the initial measurement, right? So we all know that what the cost is. You also know that the cost is the cash equivalent or a fair value of consideration transferred in order to acquire an asset, in order to bring it in its present state and condition. Okay, that's the value, that's the definition of cost. So given the information, we're going to really try to confirm whether you can obtain some information such like that, so that we answer the question, right? Can respond to your chats. Kindly increase your voice. My voice, I'll try to really speak loud, but you're aware of my condition for now. Okay. But anyway, I'll try. So this is the question. They're saying the following information was extracted from the financial statements of Third Chance PLC for the year ended 31st July 2019. They're interested on how much we spent on PPE during 2019. Okay, so here you're given opening PPE and PPE. You're given the closing PPE. You're given the disposal proceeds of PPE and the loss on disposal and the depreciation. All right. So here, not wasting time. Here they were testing you. Do you still remember your either cash flows? If not cash flows, do you still remember your T accounts at least? Okay. Although these are really cash flows. Okay, that you draw a T account for a particular item and try to balance it. All right. So let's see how we can go about it. So you're given opening balance, closing balance, or a single account. This is PPE account. The disposal and the loss on disposal, then depreciation. Right. So I'm going to draw my T account so that you can all see it. So I'll share the worksheet. Hope you can see my worksheet. Okay. Then I'm going to be referring often to the question. Okay, try to obtain that information so that you can all be at par. Okay, so we have opening property, plant and equipment. So we all know that goes on which side of the account. Okay, this is an asset account. So basically, you're looking for a T account, right? You're looking for a T account. They want you to have a debit side. Okay, the account is called PPE, and the credit side. Zoom that a little just for people to see it. Okay, so it's a T account really. Okay, so something like this. Right, so we know this is an asset account, so the debit side, opening balances always go on the debit side. So you're supposed to bring here and you say balance. Okay, let me write the way it is, opening balance. Okay, then you have the closing balance. You know it's supposed to go on the credit side. Right, so you will appreciate that they didn't give you the accumulated account. If I may take you back to the question, they didn't give you the accumulated account or opening and closing balances. So meaning that this T account is going to be a carrying account, carrying amount account, or what you call the net book value account. So what happens is that it records the cost and accumulated depreciation at the same time. Okay. So the T account therefore records the PP items under their carrying amounts. Okay. So having said that, so you don't have a T account for accumulated depreciation. Okay. So meaning that the depreciation will still go in the account or the asset account. All right. So what else? So we have disposal here. So clearly, you know, you're supposed to draw the disposal T account to confirm how much was actually paid. All right. So far I've I can take the opening balances first and the closing balances. So we have a 4.5 as the opening balance. The closing balance is 3.5. Okay. So then the disposal account. Okay, let me share the answer sheet again. Okay, so you need the disposal account. Let me put it here so that you can relate. You can see what you're doing together. Okay, so the disposal account, all know this one always arises once you see anywhere that you are disposing or selling of non-current asset, automatically the disposal T account comes through. Okay, so we are given the loss on disposal. We are also given the proceeds. Were there the proceeds? Let me confirm. Let me share the question again. Okay, you're given the disposal proceeds of PPE. So this is how much you received. Okay, but remember that in the T account, you don't take the disposal account. That's the cash that you received on disposal. But when trying to remove the asset from its books, you don't remove the proceeds, but rather you remove its carrying amount, okay, the component of cost and its accumulated depreciation. Okay, so we don't have that figure, so we're supposed to use the disposal T account to obtain it. So we have proceeds. We all know that proceeds is supposed to debit. Okay, let me share the question again. Sorry, the answer sheet. Okay, we know that once you receive money, you're supposed to debit cash, you have received it, and credit the disposal account. So here you're supposed to have proceeds on the credit side. Okay, and they were 680, right? 680,000. Okay. We also have loss, and with loss, we know that the loss is supposed to be debited in the P&L. So clearly on the disposal account, it must have been credited. Okay, so you bring in, you say loss on disposal. Okay, how much was it? The loss was 890. This is quite some loss, really, right? 890,000. Okay, so like that. So you balance off the disposal T account to obtain what was the carrying amount of the asset that was disposed of. Okay, so the credit side has figures, so clearly to be the figure side. So when I add, I have that. My debit side should also have this as total. So meaning that the carrying amount of the asset that was disposed of is the same as this. So that the total side is equal. Right? So unless you have any questions, you're supposed to now transfer that figure to where it belongs. Okay. So where does it belong? It belongs to the asset account. However, on the credit side, because you're removing the asset from the books, right? So hence you come here on the asset account on the credit side and you say disposal. Okay, so what are we disposing of? It is 157 and 123. Okay, this is what we're disposing of. And we're saying how much were you paid? We only paid 680, hence the loss of 890. So once you're here with the T account, still you balance it off to obtain now how much did you actually spend on acquiring equipment, especially when the debit side is less than the credit side. That is when you have a purchase. So when I add this side or this the credit side, you have that. So meaning that our debit side should also have this. Okay. So the balancing figure therefore is this minus what you began with. Okay. So this is the cash proceeds or cash paid on acquiring an asset. It's a balancing figure. Okay, you can respond to your chats. Where does the disposal account increase from? Where does it increase from? Okay. The disposal account, okay, if I may just remind you, a few entries on what? Disposal. Entries on disposal. Okay, the disposal account is basically more of an a solution account that just helps you to obtain either gain or loss on disposal, and then it's closed, or it closes off automatically. So how does it come about, or how does it increase or reduce accordingly? Okay, so what happens is, for the cost of an asset, asset that you're disposing of, the cost of it, we treat it by crediting the asset, because you're saying you're trying to remove the cost from the asset account, and then you debit the disposal account, right? You debit. Then we look at also the accumulated depreciation of the asset that you're disposing of. Okay, so it's accumulated depreciation. Okay, just in a few. It's accumulated depreciation. We know that the accumulated depreciation account has a credit account. So if you're removing it, you must debit it. Therefore, you debit the accumulated depreciation account with the depreciation, and then you credit the disposal account. Okay, then lastly are the proceeds, how much whatever you obtain from the disposal. That you have received the money, for example, hence debit, cash or bank, that you have received the money, and then you credit the disposal account. Okay, these are the entries. However, of course, what happens is if there's a loss or a gain, it changes accordingly. That the loss is whenever you have, if you put all this information, you have the carrying amount. Okay, to comment about the carrying amount. The carrying amount is a combination of this cost and accumulated depreciation. Okay, and usually the cost, you cannot depreciate till negatives. So because of that, usually the carrying amount will always be on the debit side, so that you have the cost of the asset, the net cost of the asset being on the debit side. I hope I've answered someone. It was on the asset account. I thought you debit the asset and credit the disposal account. Okay, Mazov, I hope I've answered your question. If I've not, kindly clarify. But otherwise, we're saying the disposal account, how you know there's a loss or a gain is whenever you're adding and you find that the debit side of the disposal account is bigger than the credit side of the disposal account, then there's a loss. Okay, but I always tell people that cramming it that way may be a bit difficult. And I always tell people that, how about you say a loss on disposal is an expense in the in the profit or loss account, and therefore it's debited there. So meaning that there was an opposite entry, which is a credit, and that's how it ends up on the credit side of the disposal account. Okay, that is my opinion. Other people think differently. So basically, that is it really, as far as the disposal account is concerned. How does it increase or decrease? It increases with these entries. Whenever you have the cost coming through, the disposal account will always increase. Whenever you have accumulated depreciation coming through, the disposal account will always reduce. Okay. By the end of the day, you balance the debit side and the credit side to obtain the gain or loss. Back to Victory. Victory, whenever you have a disposal, whenever you dispose of an asset, there's no way you can debit the asset. Because we all know that assets increase with debit entries. They have a normal debit entry. So if they're increasing debit entries and you're trying to dispose of or remove something from it, there's no way you can debit it again. So we credit it. And that's what you have done, Victory. So the answer is therefore 570, excuse me, 570,000. And if we check our question, again, you'll find that, okay, this value is totally different. Oh, I forgot depreciation. Sorry. So there's depreciation here. Totally forgot about it. So with depreciation, we all know, like I already said, that the asset account, if I may take it back to my T account, I told you that this asset account is on carrying amount. Carrying amount, or what you call the net book value. That it is the net of cost minus accumulated depreciation. So it acts as both the cost account and the accumulated depreciation account. All right. So depreciation, because depreciation increases the accumulated depreciation account with the credit, right? So even here it comes here as a credit. Okay. So we're supposed to have depreciation here, therefore depreciation. Okay. It is 1,100. Right. So if I balance again, you have 1,670 as the answer. Okay, I hope that doesn't confuse you in any way. Okay, so if you have any questions, feel free to raise them now. But otherwise, the answer therefore for this question was supposed to be 1,670, the way it is here. Okay. All right, so proceed. Go to the next question. This is question 3. Let's go to question 4 and see if we have any questions we can answer from there. So I hope so far so good. Otherwise, if you have any question, please feel free to raise it. is this slides? Okay. So here, this question for here. Okay, this one's not clear, but they were asking for what adjustment should be made at 31st March to reflect the current estimate. Okay, now this one is provisions in the books represent expected cost structuring. This was communicated to all parties during the year structuring. Okay, I can read the question. This one also still is IAS. IAS what? IAS 16. Okay, provision for restructuring costs. Remember, we said we're saying share code the previous answer. Okay. Okay, so if I may take you back, sorry for that. Here is the previous answer. Whoever has her video on, kindly remove it. I hope you were asking this, whoever was saying the previous answer. Okay. So as they look through, I can be explaining more about provision, especially under restructuring of course, or restructuring costs. Okay, you remember under IAS 16, specifically under what? Under IAS 16 under cost. Okay, although this is provision, it's supposed to be IAS 37 provision. So I don't know they're going to teach that. Okay, it's supposed to talk about how whenever there's an increase in provision, how do you treat it? Whenever there's a decrease in provision, how do you treat it? When does the provision arise? Okay, that is IAS 37. Okay, so I don't know whether they're going to talk about it. And for that reason, I feel like not talking about it now because that is another standard. Okay, but otherwise, remember under that when you're constructing, okay, an asset, PPE, we under cost or initial cost. Remember, they will tell you that you add purchase price, if there's any discount to remove, put installation, testing, and everything. Then below it, they will tell you present value of estimates of restructuring or how do you call it? Or restating, okay, the condition of the land that was supposed to be before you brought in your PPE item. Okay, so for that reason, question 4 shall maybe answer it when we appreciate more of this standard IAS 16. So let me not talk about it now for provision, for purposes of being uniform and being consistent, okay, and not confuse anyone. So question 5, therefore. Okay, question 5 says that Robert, okay, if I respond to somebody's chat, should I call the previous answer? Okay, right. So if I take you back to the questions, question 4, I said it is under provisions. Really, I don't want to go into it now. Okay, we can go to question 5. This one says that Robert PLC controls land. Okay, so once there's control of land, that means you own the asset, right? But we all know that with assets, you either have IAS 16, IAS 16, or IAS 40, right? Depending on the purpose of the asset. So yeah, they're saying Robert controls land carried at 12 million at 31st July 2018, its reporting date. It has received a valuation from professional valuers showing a fair value of 14 million. It wishes to incorporate the revised values into the financial statements. This land has previously been revalued. So clearly, whenever you have a professional valuer coming through, here this is IAS 16. Okay, IAS 16, where we see under subsequent measurement, we have the two forms. You have the cost model and the revaluation model. Okay, so whenever there's revaluation over and over, you know that is the revaluation model. And we also know that with the revaluation model, our interest is usually whether there's a gain or a loss on revaluation. And how we treat it, we are going to appreciate it more with the question, really. Okay, so here you're saying that you revalued, which is good. I think this was what they're saying, it has received revaluation. So is this a gain or a loss? Okay, maybe before I ask you that, how we obtain the gain or loss on revaluation? We compare the fair value, not actually the fair value, we compare the carrying amount, okay, and the revalued amount, the carrying amount and the revalued amount at the same date. Okay, so whenever the revalued amount is greater or higher, of course, that is a gain on revaluation. And whenever it is lower, then that is a loss on revaluation. Okay, and we all recall that with the gain, we're supposed to, if there wasn't revaluation before, it's supposed to debit your asset that has increased with the gain, and then credit the other comprehensive incomes, right? So this is information that we have here. I'm going to pick the information and summarize it in the answer booklet, or sorry, in the worksheet, and then we see how to read it, right? I will still emphasize that whenever you see the evaluation, you are interested mainly in the gain or loss on revaluation. At the same date, keyword is at the same date, that you're comparing the carrying amount at the same date as the revalued amount. Okay, so if I may take you to my answer sheet, I'll pick the information as, okay, unfortunately, I won't be referring to, I won't be showing you the question, okay? But as I pick the information, I will be saying it as I read through. So here they're saying Robert controls land, okay? Post control, hence PPE or an asset. Carried at 12 million at 31st July 2018. So you're interested in those dates always, okay? So this is 31st July 2018. So we're having a carrying amount, right? Carrying amount. Let me abbreviate it as CA. It is 12 million. I should put commas so that we see the figure properly. Doing what I want. Okay, so we have the carrying amount on 31st July. Sorry about that. And then we have they're saying that it has received a valuation. Okay, it has received a valuation from professional valuers at a fair value of 14 million. So we know that this is the revalued amount, right? Revaluation amount or revalued amount. Okay, so this one is 14 million. So anyone can see that clearly there is a gain. Okay, gain on revaluation. Let me even put it here. It's a gain revaluation. We say that the gain arises when the revalued amount is greater than the carrying amount. So it's saying revaluation amount. Let me use RA, then the carrying amount, right? So our answer is 2M as the gain, right? Let me first pick all the information because I think I'll confuse some people if I just go like that. So then I'm saying it wishes to incorporate the revised values into the books. This land has had previously been revalued for the first time in 2016, and the loss on that revaluation was 1.3, and had been charged. Okay, so allow me call the dates. You're saying somebody will have video on. Kindly remove it. So you're saying there's a previous transaction in 2016. We had the loss revaluation of the amount is 1.3. Okay, and had been taken profit or loss. That is supposed to be obvious, really. Then they're saying, what is the correct accounting treatment of revaluation on 31st July 2018? Okay, so they're interested in how we're going to treat this 2M. Okay, so this is the whole thing. that with evaluation, always obtain the carrying amount. Okay, we all know that if it wasn't land, if it was a depreciable asset, we would have cost minus accumulated depreciation to obtain the carrying amount. Okay, that is if it's not given anyway, but if it's given still, you don't have to do that. Okay, but because it's land, it's usually easy really. Okay, hence carrying amount is as straight as the value which it is. Then the valued amount, the new value that you're attaching to the asset by the professional valuer. So when you compare the two, you're supposed to obtain either gain or loss on revaluation. Whenever there's a gain like it is now, we all know you're supposed to straight debit your asset because it has increased. Okay, in this case, it's land. Land with the gain. Okay. Okay, I have to mute that. Then credit. Okay, we credit the other comprehensive incomes. All right, with the same amount to M. This would be okay if it was the first time you're revaluing. Okay, and just for the loss, like if I may just confirm with you here, what they did before, previously what they did is they credited, let me begin the debits. They debited P&L with the loss. Okay, in this case the loss was 1.3, and then they had to credit the asset, in this case land, with 1.3. This is what they did previously, and no wonder at the end of the day their land was 12M. They didn't give us how much it was then or originally, but from this you can totally see, or you can easily agree with me that it must have been this. Okay, it must have been 13,300 then before the impairment, but when they had a loss on revaluation, sorry, this value was reduced by 1.3 to come up with the carrying amount that they have now, which is 12M. Right, so this is previously. Now today, what has happened is you have a gain, but whenever there's a gain, you're not quick to always take the entire gain to the other comprehensive income. No, you don't do that. What you do is whenever there's a loss, especially the loss, because if there's a gain, then still you would have the same answer. But if there's a loss before, you're supposed to first offset the loss. Okay, in this case, we're saying that the loss was 1.3. So ideally, you're supposed to come here and credit P and L. P and L with the loss. Okay, allow me even put details. Here we're saying you're trying to reverse the previous loss, right? So by crediting the P and L, you're trying to reverse really the previous loss because the loss was taken there, and it's only to the extent of the loss, hence 1.33. 1.3. All right. So now the balance. That's when the balance goes now to the other comprehensive incomes. Okay, the balance of this minus this, so that your debits must be got to credits as it is here. So these were supposed to be the entries. If you respond to your charts, where have you got to the 1.3? Okay, I thought to credit P&L. Okay, both levels, but Sumaya, I hope you have seen what I've done and you have been answered. Then Chiravo, Vicky, the 13, we are saying previously, see, in 2016, what happened is that they had a loss of 1.3 and they passed it. So meaning that the land then, okay, here we're saying original cost. Original cost of land in 2016. It must be 13,300, so that if you deduct the loss that they had by crediting the asset by 1.3, you end up with the 12 million that we have currently. Okay, but don't give it a lot of thought, really. It's not important. I just wanted to show you that if the original cost was 13.3 and there was a loss of 1.3, then that is why we have 12 million right now as the carrying amount on 31st July 2018. Okay, so when we revalued the asset again, we had a gain of 2M. And I was saying that this gain here, this gain, ideally, if you didn't revalue before and had a loss then, you would have just debited land and credited OCI or the other comprehensive income straight with 2M to M. But because there was a loss before, you had to first reverse the loss by crediting the P&L. Remember, P&L has a debit balance. So the only way you can reverse it is by crediting it, right? Hence the credit, okay, reverse. Actually, you find this under your P&L under other incomes. You find there, you say a reverse of the previous loss on revaluation, 1.3. Okay, then the balance, of course, goes to the OCI. I hope I've answered you guys. Please, in the other comprehensive income. Okay, I just want to know the difference between incomes and incomes put. Okay, now I don't think time will allow me to complete this. PLL and other comprehensive incomes. The P&L is the normal account that you know, sales minus cost of sales to get gross profit, minus plus other incomes to get gross income, minus other comprehensive incomes, okay, until you get profit for the year. For the year. Okay, so under profit of the year, this is where you add other comprehensive incomes. Okay, I will add more light on that since time is lapsing on this link. Okay, let's rejoin as soon as the link closes so that you can continue with what we are discussing. Okay, so as maybe as it closes, as time lapses, other comprehensive incomes, I was saying here mainly it's really right now at this level, it's basically revaluation gain. Basically, where you have valued an asset, this is where the gains come. Okay, at this level, this is what you're going to be covering. Okay, I think there's another gain that usually comes here, especially to do with forex exchange.